some economists predict the Fed is going to pivot this month and issue a rare rate pause on the hikes. Christian Clausen with Burns Financials here to talk about the possible outcomes. Christian, good morning. Thank you so much for being with us.
Thank you. Thank you.
So let's start off with this first question about this situation. What effect does this decision that the Fed makes have on the market? And, how could they possibly rule based on how they've moved in the past?
Well, the good news is that inflation has actually slowed down. So, and that's the whole goal, is just trying to get inflation to come down. So it's been growing at 4.9, and we finally saw the numbers from last week coming out at 4.0. So them taking a break right now, taking a pause, is what we expect, and the news is going to come out here in the next few hours. But there's been some speculation that they're going to do a skip, and maybe next time actually increase.
And if they were to hike it or to put a pause on it, how does this impact inflation, if at all?
Well, because it has been coming down, more and more, we're expecting that that's going to be enough. We're hoping that's going to be enough. But yeah, the rare occasion that we see some spike in inflation here over the next month, that's probably the only reason why they would do another rate hike. And
I know this is kind of a loaded question, if you will, but can you give us the pros and cons of these rate hikes that we had been seeing? Again, I'm expecting a pause today, but the pros and cons of hikes we had been seeing.
Yeah, so let's start with the bad news.
Okay.
I think any type of borrowing is going to be difficult right now. Of course, everything is high. So that's going to slow down the economy, and that's the whole reason why the Fed is continuing to raise interest rates. So you're going to see business, trying to, do some, borrowing, and it's going to be more expensive. Everybody trying to look for, buying a house. Of course, they've seen that. Good news. The good news is that savings rates, are at the highest rate. We can get 4.5%, 5% safely. And that's been 2-3 years before since we've been able to do that.
And that meeting is set for later on this afternoon, is that right?
Yes, that's right.
And again, expecting, and I guess I should have asked you this in the beginning, what is telling people in the financial world that you all are expecting them to put a pause on things? What is indicating this possible pause?
Well, they've been pretty good at telling us what they wanted to do. And they've said, even from January, and they stayed steady with hey, we're going to do 2 more rate hikes, about 25 basis points apiece, and then we're going to take a break, take a pause, and then kind of look at all the data to figure out what the next move is.
So based on what they've said earlier this year and how they've moved, this is the time when that pause should be coming. But we have to wait to see for sure today.
We have to wait to see.
All right. Well, Christian, we appreciate your time this morning. Thank you so much.
Thank you.